There. So in this video, I'm going to be talking about the coming liquidity crisis. And now when it comes to a liquidity crisis, this can mean a lot of things for a lot of different people. And ultimately, the biggest issue that we would find in a liquidity crisis is if the bond market, and more specifically, the Treasury bond market, the US government bonds, if those were ever in a situation in which that somebody went to go sell one of those bonds, like if they had one in their possession and they went to sell it and they couldn't find a buyer, that would be liquidity issues taking place within the government bond market. And this is something that the US Treasury Department is well aware of, that if this particular bond market, right, the Treasury Department's bonds, if they were to become illiquid, meaning that they had trouble selling them in the open market, this would have devastating consequences to the entire financial market. Everybody is backed by the US government bonds. When you think about like world transactions that are taking place, like global transactions, a lot of people think of the dollar as the dollar being the global reserve currency, which is very true. But a lot of times, and I would say probably the majority of the time, they're actually using US treasuries to do those transactions, because at least if you hold on to a US treasury, you're getting a little bit of interest off of it. And because they are as liquid as they are, meaning that if you go to sell it, it's an almost instantaneous sell, no problems, then people kind of look at it as if it's cash. Well, if there ever came a moment in which that they are not viewed as good as cash, then that's going to start creating financial issues throughout the rest of the banking system. So when it comes to the US treasuries, it's absolutely critical that they stayed liquid, meaning that if there was ever a time when somebody wants to buy or sell, the market will participate, right? And so now if you think about what's happening here with the issues going on with the Federal Reserve and the unwinding of the balance sheet and the quantitative tightening that is happening. See, this is much different from what a lot of people think out there when they hear about how the money printer's going burr and they're printing up all this money and they're doing all this, crazy stuff with the expansion of the money supply. They're actually going the other way with it. They're reeling in the money supply. They're pulling in those dollars. They're bringing back their liabilities. This is the Federal Reserve, which is actually shrinking the money supply. And that in turn will at some point create the liquidity issues. Now, nobody knows exactly where that level is, the moment that it goes from liquid to illiquid, but there is a moment, some point in the future, in which that moment will take place, in which that the bonds go to sell and there's no buyers for them. So now this is the critical situation that the Treasury Department is well aware of. Like, they know that this moment is coming and they have planned it for months. In fact, it's probably well over a year now. I've been doing these videos talking about how the Treasury is planning to do a bond buyback in the middle of 2024. Now, there is no exact schedule for how much and how far out or exactly what this is, but the idea of what it is that the Treasury Department is trying to do is becoming very prevalent within the market itself. Now, if you go and you listen to some of the things that the Treasury Department is saying about this bond buyback program, and more specifically, I believe the gentleman's name is Josh Frost, if I got it right, who is the Treasury, or Secretary of the, Treasury Secretary of the Financial Markets, I think is what his title is. Anyway, he had something very interesting to say about this bond buyback program, and that the idea that the Treasury Department is going to step in and buy back their own bonds, being the provider of the liquidity, right? So if there was ever a moment that the bond comes up for sale and there's not a buyer out there in the regular open market, the Treasury Department will step up. And now they're going to make this announcement here in the next, few weeks, months, sometime here in the near future. They are going to make this announcement. This announcement is going to be very clearly spread throughout the mainstream media so that everybody is well aware of it. And the point of that is to bring in the idea that the Treasury will be there, should also bring in the markets, the willing participants from the market itself. So basically, if the Treasury Department says, hey, we are going to be here to buy back our own bonds and provide the liquidity needed for all the bonds that are going to be sold out there, no worries, then the market itself will then step up and say, okay, so long as we know we have the Treasury at our back, we will participate within this market itself. This is a credible threat, straight up. Now, not saying that the Treasury Department won't participate in buying back their own bonds. I'm sure they will. But just the idea alone and being spread and communicated well enough out there ought to have the credible threat to then bring in the market itself to start providing the liquidity needed for all these bonds. And this is something that I am anticipating coming from the Treasury Department here in the next few months. I mean, I have been talking about this bond buyback program for literally like a year now. Okay? And to me, this is the bigger issue that has taken place that hardly anybody is even describing out there. I mean, I found this particular article, but very rarely do I find anybody talking about how the Treasury Department is going to be buying back their own bonds. I mean, this is something that they have only done but a few times in the history of their existence. Like the last time they did a bond buyback, I believe in the article it said 20 years ago, and then before that it was back in like the 20s. So this is a major deal that is now taking place or about ready to take place within our economic environment, and hardly anybody has taken this into consideration or even know that it's out there, right? It's very crazy to think about. All right, I'm gonna keep it short here because I don't have a whole lot of time on my lunch. I got maybe about another 20 minutes or so, and then I gotta jet out. But I think this is a great conversation to have. I think this is something that we need to internalize and understand in a much better fashion than what it is that's being told out there on the mainstream media, because what I feel is coming out on the mainstream media right now is the propaganda to try and bring in those willing participants. Like, you think about it right now, the Treasury General account is absolutely loaded in cash, and nobody knows exactly why they would have this much cash sitting on hand unless you plan on doing some sort of stimulus spending or something of that nature. Like, typically the amount of money that would be sitting in this account, the Treasury General account, would be about half of what it is right now. So there has to be a plan for this money. They just don't sit on it for no particular reason. Now, a lot of people talk about all the debt issuance that they've gone through over the last few years, and I think about that as well, considering that they're sitting on the amount of cash that they are. Like, I know that they're sending all this billions of dollars and stuff like that overseas, and everybody at work is all lit up about it, but nobody at work knows about the bond buyback program or talks about anything about that. So as all this other media attention is being brought to stuff that I feel is less important than what has taken place within the bond market itself, this is the situation we're now in. All right, let's go on here. I appreciate you bringing up the liquidity crisis because it has been so quiet and most news channels forgotten about. It has been, and I don't get it. Like, I don't understand why. Like, this is probably the most impactful thing that is going to hit more people in a general aspect, right? And like, each individual person might be hit differently. Some people might do quite well. Some people are gonna, suffer consequences. But the bond buyback, the liquidity crisis, all that other stuff, I believe is more of a general aspect of the entire economy than any one individual thing, especially stuff like spending money over in Ukraine. Like, that has no impact on any individual person. I mean, I shouldn't say that. It doesn't have any impact on the general individual persons, right? There might be an individual person out there who might be impacted by it, but generally speaking, everybody individually doesn't have any kind of like impact from that. But a liquidity crisis, you would. And really, like, if you think about it, if there's a liquidity crisis happening within the Treasury Department, can you imagine what the corporate debt market's going to look like? I mean, holy moly, if the Treasury has a problem selling bonds or having, liquidity within their market, I can't imagine what the corporate debt market's going to be like. It's going to be scary out there, I underwrite small multifamily deals, nothing pencils. Sellers want too much. Feels like AVs are quite high of lately too. UE, speaking of your coworkers, do you find yourself being met with blank faces when you try to approach these subjects? I just don't even talk to them about it. There's one guy that I will talk with, two guys, I guess, occasionally. But for the most part, I don't even really talk about any of this stuff. I don't talk politics. I don't talk economics. I don't talk any of this stuff because really, it's not good. It's not for good conversation, to be honest with you. It just doesn't work out very well. Um, these people know me. They know who I am. They know what I do. They know what I'm up to. Like, I babble on about this stuff so much, but to actually sit down and try and discuss it, we have other things that we talk about. In fact, most of the people that I know personally, like in a face-to-face conversation, very rarely do I talk economics with them. Occasionally, like a customer might come up and this is like, hey, and throw like an idea or something around, and I might have a brief conversation with them about it. But for the most part, I don't really talk to anybody about economics on a personal level. Like, I personally don't have conversations with people about stuff like that. All right. What do you think would happen to the economy if treasuries make buybacks part of their weekly operations? Well, it's going to become part of their weekly operations, but um, I don't think much is going to take place at all from this. Like, what really is the major concern is that somebody goes up to sell a bond and they can't sell it, right? Then what'll end up happening is that price will begin to fall until they can find a buyer. And if the prices fall, then the yields rise. And that's really where the Treasury Department, I think, is trying to prevent that kind of outcome from taking place. And really, when it comes to the bond buyback, like, the Treasury Department isn't going to be buying back the bonds from like individual people. It's probably most likely just going to be dealing with the primary dealers. The primary dealers, if they were ever in a situation in which that they were the buyers and sellers of these bonds to like the public market out there, and they were having issues like buying and selling those bonds, like they didn't want to buy some bonds from somebody because they had issues as far as selling them off themselves, that's where the Treasury Department is stepping up, and they're going to say, hey, we're going to be here for you guys. No worries about this, right? So if you have bonds and you go to sell them and you can't find a buyer, we're going to be here, right? And by them saying that, then everybody should be cool and be like, all right, cool. As long as the Treasury Department's here, then I feel good about being able to buy and sell these things, knowing that I won't get stuck with them, right? That's like, it's the same. It's almost the exact same mentality that took place during the pandemic with the setting up of the special purpose vehicles. And in here, let me see if I can bring it up. Like, because I think Christopher Waller described it really well in one of his speeches. Let me see if I can bring it up here on my computer. It's shut down right now. But ultimately, by having the facility there, right, and making the announcement that they have this facility, is enough to then bring in the market participants into it. Like when they set up the special purpose vehicles and then made the announcement, hey, we are going to be buying back bonds, we are going to be buying the corporate debt, the corporate bonds, and we're going to put them into this special purpose vehicle. That announcement alone had, let's see here. Okay. I'm sorry, it came from Claretta, and I said this. These programs are designed to offer backstop sources of funding to the private sector. And just the announcements of these backstop facilities would soon be launched appears to have bolstered confidence in the capital markets, allowing many companies to finance themselves privately even before the facilities were up and running. It's that sort of credible threat. Now, he's talking about the special purpose vehicle set up during the pandemic to backstop the corporate debt lending facility, or corporate debt market, through this lending facility. But it's the exact same credible threat that the Treasury Department is going to use for their bond buyback program. Just simply making this statement ought to do it. Like, let me read it again. These programs are designed to offer backstop sources of funding to the private sector. And just the announcement of these backstop facilities would soon be launched appears to have bolstered the confidence in the capital market. Same thing. That's exactly what the Treasury Department is going to be doing with the announcement, right? And in fact, I think they even said it in the article that they should be very, I think something like cautious, or, not giving out too much data release, like just kind of make this very vague, because too much information and I feel that the market would actually begin to anticipate more than what it is that the Treasury is actually willing to do, right? So just by putting the announcement out there, hey, we're going to be there to buy back these bonds. We got this program and it's very cool and it's casual and no worries about it. And that announcement right there, I believe, is the whole point, right, is to make sure that that announcement is clear. It is, defined in a way that has the confidence then put into the market itself to then participate in a way as if the Treasury is there, right? I mean, because they will be there, but they don't necessarily need to be there so long as the people are convinced of it. Did I say that right? All right. Um, that's a great question, but feels like most folks are willfully ignorant about personal finance and economics. Oh, they absolutely are. Same. I've given up, tried again recently. I find it better to listen to people and gain their perspectives. That's kind of what I find too. It's just, I mean, I have to deal with it every day. Like, I mean, I do retail sales for a living, right? So every single day I'm selling little products, I'm selling big, packages, whatever. I do, I work at a lumber yard. But it's amazing the amount of excuses that I hear people talk about out there. Corporate greed, Biden's fault, all this, money printer, all this other stuff. Like, they have all these excuses and everything that comes along with it. And it's very interesting to hear the perspectives that a lot of people have. Like, I've listened to people have deep conversations about how Biden caused the lumber prices to go up. And I am just sitting there listening to this gibberish, coming out of these people. And I just smile and nod, and I'm like, wow, man, I never thought about it like that, is what I tell them, because I don't think about it like that. And it's just very interesting to hear all this stuff and knowing like what I've done and researched and stuff, and it's very few people that I ever have communications with ever bring up some of the things that I've talked about or the research that I've done, or even understand like what average inflation rate over time even means. Like, these things are so obscure to most people, but yet they have this very confident belief in what they know about the economy and what causes the issues within it. And so it's just like, I look out there and it's mass confusion that is happening. And it's amazing that people can actually function through it like that. I mean, I think about it like I did for the longest time, not having any clue about what was going on inside of the economy, but very, very heavily involved in politics at the time. Like, so it's just, it's quite unique. I mean, this subculture of studying economics, macroeconomics, is very unique. Like, most people don't, like, especially if you're working class like me, just working a regular day job or something, like, taking on the amount of research and understanding of monetary policy and stuff, this is not something that people like me do, right? I mean, this is very unusual. And having the perspective that I do, I believe, gives me a much better or more unique insight into a lot of things that are happening within the economy, because not only do I have a better understanding of monetary policy than I would feel most people do, but then I also have real-time view of what's taking place within the economy by working retail sales for a living. Like, most people who study the economy have to wait for the data to come out that we are living in real time. We are ahead of the game, far ahead of it. Like, I'm able to call out and make predictions on my channel that people are like, dude, you're delusional. There is nobody out there talking like you were talking. I know. I'm the only one, because I see things so much farther ahead of a lot of people out there just simply by working the retail space that I do. And that's it. Like, I mean, just literally being in the space that I was gave me access to the mills, to the vendors, to the distribution networks out there. Like, the view of the lumber industry that I had was more accurate, clear. I had a better understanding, like, than almost anybody else out there. Even people who were like huge into the corporate aspects of things, like, they did not have the view that I had. Right? And I mean, I was even called up to, do interviews with, some pretty high level people to give them my perspectives on what I was seeing from the retail space. It was quite interesting. Now, of course, the lumber story is all over. Nobody cares about lumber anymore, but it was, at the time, it was a very interesting moment. All right. The left hand shake to lefty dog. Left dog, you left field. Huh. All right. This guy can't rub two quarters together to buy a shave. If you follow his advice, you will be herding shopping carts at Walmart. Well, thanks, Lefty Dog, man. I really appreciate the support. And, all the times that I've been out here every single day sharing everything that I've learned about monetary policy, I'm glad you don't have any use for any of that stuff. Glad to see you here, bro. What kind of comment is that, man? Get the hell out of here, bro. All right. I feel that it's hard to help people understand when you can see things 6 to 8 months away. Thanks for all you do. Yeah, and it is very difficult to be one of the few people out there who will run against the grain. Like I will not fold to the mainstream media narrative just because that's what everybody else seems to think. Like, I am not that way. I am not going to do that, right? And I don't care if I'm the only person who is talking the information that I am, and every single person in the world is calling me crazy. This is the way I see it, and I'm not deviating from it, right? Because this is the information that I have found. There is plenty of people out there who have opinions. There is plenty of people out there who are very accurate and very understanding of how the financial markets work and how, the stock market and all that other stuff works. Great, right? I mean, I'm not denying their information whatsoever. The things that I have learned directly from the Federal Reserve, from their websites, from their speeches, from their own words, right? This isn't coming from somebody who has their own interpretation of the Federal Reserve. I mean, I'm not getting information from somebody like me. I'm getting it directly from the Federal Reserve. And this is where I encourage most people to go and get the information. It's one of the reasons why I keep constantly bringing up their speeches and going over them and reviewing them and talking about them, is because there's nobody else who is going to provide you with the information like they are going to provide you about the monetary policy. There's all kinds of stuff to know about when it comes to politics, when it comes to the environment, when it comes to social, when it comes to everything out there. There is a lot of stuff, right? And I'm not going to say that I'm an expert on any of that stuff out there, nor am I an expert on monetary policy, right? But what I am is somebody who is constantly researching this particular corner of the economy. And I find that is probably one of the most important things to understand, because it has a direct impact on our individual lives as an individual person, right? Not like politics, it has this broad, impact. Monetary policy has a personal impact on you. Those interest rates and what happens with them has a personal impact on you. The businesses that you start, the house that you might buy, the credit, the debts that you might take out, all this stuff has a personal impact on you. And the decisions that you make must be appropriate to the monetary policy decisions that are happening out there. I cannot tell you how important it is to understand it from that fashion, right? And then when you do, and you incorporate that into your day job, then you can see that you actually have a better view of what's going on in the economy from your day job position, whether you're driving truck or serving tables or selling lumber, doing whatever. Like, that view is more accurate and more on the cutting edge than anybody else's view. I don't care what they do. I don't care how high a level of banking finance they are in. They do not have the cutting edge view like somebody who is on the street working a day job does. They just don't know it, right? They just don't know it. They can't see it because they don't take the information in, and they don't understand how the concepts and the theories work, right? Because why would you? I mean, it's an obsession that is really has to be like, you have to have a passion for it. You're the best, Simon. Well, thanks, Greg. I'm doing my best. We got 523 people watching right now. This is incredible. Okay, I'm going to push it a little bit further out here on my lunch just because. All right, when I say selling stuff, I'm betting stuff goes down. Oh, you know what? I think I screwed up. I think I took my lunch too early today. Oh, well. People like that last guy will always be broke. Always. He has nothing on the line. That's why you can say stupid shit like that. I've traded derivatives for decades, and I come here to hear what you say. Hear what you... Oh, well, thank you, man. have to say is value in this. Hopefully you can paint a picture of what he says and make some money off of it, because we are going to have generational selling opportunity. Yeah, and this is really like, you know, there was plenty of people who came to me during when the lumber was running up, and they came to me and said, dude, thank you so much for all these videos that you are putting out talking about the lumber industry. You have saved me so much money by, you know, they either postponed projects or they went ahead and hurried up and purchased the items before they ran up in price. I mean, I could not believe how many people came to me and said, dude, thank you so much. You literally saved me thousands of dollars. And in fact, I had somebody who was like a commodities trader, a commodities broker, call me up and said, hey, dude, thank you very much for your information. I made a ton of money off of some trades, and I was using your lumber information, your videos, to make some of my decisions. And man, I thank you a whole bunch. And I'm like, man, that was awesome. I really appreciate you sending me the email, and, you know, glad you were able to use the information to make some money. I wish I could do that. He sent me $100. He says, well, there's your commission, bro. Right. And so I know the information is valuable to people out there. I know that it can be, and I understand, like, you know, when I start getting into Cantillon theory and monetary policies and stuff like that, not a lot of people can relate to that stuff in the same fashion as they did, like, say, the lumber industry when it comes to, you know, conducting their business, if they're a carpenter or, you know, contractor, you know, even doing brokerage or whatever. Right? I understand that that information is a little bit more valuable, but I would not have had that information. I would not have been able to make those calls in the lumber industry or anything else I do if I wasn't studying the monetary policy, the macroeconomics, the theories, the stuff that I do. I would never have been able to see that stuff in the lumber industry. There's so many people who told me, dude, stick to the lumber. That's what you're good at. And I'm like, I can't just stick to the lumber. I would never have been able to do that in the lumber industry if I wasn't doing all this other stuff too. You know, and I think that's really important for a lot of people to know. All right, people like that. Oh, we already read that. Okay. Um, Stay curious. I think all assets, gold, Bitcoin, real estate, have risk. It's just different types of risk. Yeah, I agree with that. All right. Thank you, wood on a coin. Did you see the other evening turning onto Redland Road? I don't know that one. Who thinks there will be another Great Depression? I don't know, like, I think about, like, if there's going to be another Great Depression, I would think that there would be some kind of issue in which that the Federal Reserve cannot do the expansion of the monetary system or the money supply like they had during the pandemic. Like, that to me would be the major issue. Like, they would not have the excuse or the reasonings to go into the money printing. Like, you think about a great financial crisis, right? You know, the whole banking system was about ready to collapse. So this gave them the unusual circumstance, right, to do the things that they needed. Pandemic. With COVID gave them the reasons to be able to do the things that they were doing. What is the next reason? Like, what is the next reason that's going to come? Like, if they say, oh man, people are going broke, right, and they are not able to pay their debts, and all this mass bankruptcies are taking place, and the financial system is starting to freeze up because there's no credit-worthy people out there, and that's the only thing that they can find. Like, you know, obviously there's a war that could escalate or something of that nature, but they don't have any kind of real excuse. Okay? See, typically they would want some kind of something to be happening out there, right? You know, like great financial crisis, COVID, terrorist attacks, something, right, that gives them the reason or the excuse. Otherwise, they have to convince the people, hey, we got to bail out all the corporations and a bunch of you are going to lose your jobs. None of that goes over really well, right? So, like, continuing on with the monetary system the way they do, or the way they have it, there almost has to be an excuse for them to carry it on, like COVID or something, right? And so now I think, what is the next excuse going to be? Like, what is it that's going to happen that's going to create the situation in which that the Federal Reserve says, oh, hey, we have to deploy these new systems, these new tools, the central bank digital currency, these stable coins, these, you know, this change to our charter, you know, there's all kinds of things that could happen. but nobody knows exactly what it is that's going to take place. And that's really where, like, I think a lot of times a lot of economists end up assuming, stuff that's out there. And I try not to assume what it is that the Federal Reserve could do, right? Like, as far as deploying things like the Bank Term Funding Program. Nobody knew about that thing. Nobody knew that it was, but people knew that there was going to be banking liquidity issues, right? People were talking about that. I mean, I saw a ton of YouTubers who were accurately calling out the liquidity issues within the banking system, telling you to get your money out of the bank now. They were accurate. The problem that they didn't address, or within their thinking, is that the Federal Reserve also knew it. Right? They also knew that there was going to be liquidity crisis, and then people were probably going to end up pulling their money out of the bank. That's why they had the Bank Term Funding Program ready to deploy for that particular situation. And it's things like that that are going to be happening into the future that we are just not aware of until they actually occur. So to me, it's a very difficult way to say what's going to happen or what are they going to do. It's just like, I don't know. Like, I know that liquidity issues are coming to the Treasury Department. It's going to, liquidity issues are going to be happening within the bond market. If it's happening within the United States Treasury bond market, then I would only assume that there's probably going to be issues happening within the corporate debt market as well. Right? And so it's just like, it's almost like, just kind of wait and see. It's just like, so what are you going to do? What are you guys going to do about all this? What announcements? Wow, 541 people watching right now. This is incredible, man. I'm loving it. All right. The Fed has unlimited power to extend ZERP, and Burr will lower interest rates. See, this is the thing. Like, how do you incorporate a zero interest rate policy, and how do you make the money printer go Burr? Right? See, a lot of times we just say, no, they can just do it, right? But the Federal Reserve doesn't exactly have the ability to just print up money and just go out there and just like, just hand it out to everybody, like just throw it out the door, right? They can't, it doesn't work like that. Like that's not how the Federal Reserve operates. The Federal Reserve operates by the expansion of their balance sheet, meaning that they have to have something to buy, right? And most of the time, that thing that they buy is the U.S. Treasuries. That's the asset that they put on their balance sheet. They can put gold, they can put SDRs, the special drawing rights, the basket of world currencies, gold, SDRs, treasuries, mortgage-backed securities. There's stuff that they can put on their balance sheet. But for the most part, it's that U.S. Treasuries that they do it with. Now, if they go into mass money printing and buying up of U.S. Treasuries, where do the U.S. Treasuries come from? Right? Either one, they have to come from the Treasury Department itself, meaning that they have to issue out the debt, meaning that they have to go into debt in order to provide the treasuries for the Federal Reserve to buy, right? Or they have to go out to the market and buy them off of the open market that is out there. Now, if they go out to the open market and start buying these things, what happens to the price of them? They start going way up and the yields start to fall, right? Now, the Treasury Department can participate in this exact same thing by not issuing out any debt. They can limit the amount of available assets out there for the Federal Reserve to buy. These are the situations that they are now facing. Now, whether or not that's a good or bad thing or part of the strategy, it's really, I guess, into the position that you have put yourself in. Okay? But this is really what the Federal Reserve is facing, is that they do not want to be the one to buy the treasuries here in the next few months to a year or whatever it is. They're trying to unwind their balance sheet, meaning the Treasury Department is on their own for who it is that they're going to sell those treasuries to, and that the Federal Reserve isn't going to be there to be the buyer of it, which means that the market has to be there, which makes it very concerning for the market, saying, oh crap, the Fed isn't going to be there? Then who's going to buy these bonds if I'm sitting on a bunch of them and I want to sell them? This is where the concern starts to rise. So the Treasury Department is saying, we'll buy them back. We'll be there. Right? So the Treasury Department is going to be the one to providing liquidity to the bond market, not the Federal Reserve. And understanding it from these two different positions, this is like, this is a very unique thing that is happening. And it's really important to understand why it's happening in this fashion. Right? It's, and again, it's because of trying to provide the liquidity to that bond market at the same time the Federal Reserve is trying to tighten up their monetary policy, right? So it's just like, how do you do this? It's just like, it's almost an impossibility, but yet here they are. They have a strategy that's set up. They have it in plan, and they're not communicating it very clearly out there to the people, right? Made a statement about it almost a year ago, kind of puts a little bit of chatter out there. Most people don't have any clue about it, you know. All right, exactly. The Fed needs a distraction to validate their new rhetoric. It won't be the economy to which it should be. Yeah. Thoughts on lights going out in California, aka power grid failure? Barterability would equal cash being king, right? Yeah, I don't know about as far as the power outages and stuff like that. I wish I had a better idea and opinion on that. All right. Hey, Deja All Nighter says, thanks for joining the stream. Hey, stay. Looking to conservative banking for your future or not? Good day from West Bend. Sorry, Deja, I'm not sure. Look to conservative banking for your future or not? Treasury bond care always able to increase thanks to Congress. Inflation will be understated as always. The Federal Reserve asked me to come back to work on their IT system. Is there a chance Fed will be dissolved in our lifetime? I don't think so. Like, I really don't see the Federal Reserve going anywhere. And like, they had 100-year charter to them or something like that they were supposed to only exist for 100 years, but then that ended, right? And they just continue on with the Federal Reserve system. The Fed, like, I don't know what it is that could replace the Federal Reserve. Like, if you just think about it from like Gresham's law kind of thing, like, there is nothing out there that can be introduced that can say, hey, we're going to have this thing compete against the dollar, because it just wouldn't work. You can't introduce a bad currency because nobody would use it, and you can't introduce a good currency because everybody would hoard it, right? So long as you have a currency that is viable and in the system, there's really nothing else that's going to beat it or replace it, unless you have something that is an equal trade. Like, if you had something that was equally traded with the dollar, and people were looking at this new item saying, well, that's the same thing as a dollar. Like, if it trades 1-to-1 and, you know, everybody's cool with that and everybody knows it and nobody's like, you know, questions it, then what you can do is introduce a new currency that trades 1-to-1 with the dollar, and then slowly get rid of the dollar, leaving that other currency out there. This is essentially how the dollar was able to replace gold. It's because people looked at the dollar as the same as they looked at gold. If you have a certain amount of dollars, you got a fixed rate of gold. Everybody knew it and everybody was cool with it, until they realized that you couldn't do that anymore. So I don't know what it is that would actually create a situation in which that the Federal Reserve was completely dissolved, unless you had a full-on complete collapse of the entire system where all chaos is now broken loose. The casual replacement of the Fed with something else, I don't see it. I don't think it's going to work that way. And if it does, it's probably going to happen in the form of like a stable coin that then replaces the dollar's use, even though it would be essentially representing a dollar. But then that stable coin could become the new currency, and now you have a new system. But again, it's something that's traded equally with the dollar in order to acquire that position. I don't see anything out there that's doing that, you know. Man, there's so many people watching right now. This is incredible. All right, Robert Shields, great to see you back here, man. I'm sorry about yesterday. $4.99. Thank you so much for the super chat. In what scenario would the Fed not backstop liquidity? Well, I think this is one. Like, the Fed is not going to be there in the sense like a lot of people would anticipate the Fed being like the buyer of bonds, like doing the quantitative easing thing. The Fed is going into quantitative tightening, meaning they're getting rid of bonds. They're allowing those bonds to come off their balance sheet. Well, if the liquidity issue starts to rise, then they're not going to be there. The Treasury is. And so this is like one of them where the Fed is just like, hey, you're on your own, yo. You know, there should be plenty of liquidity out there, plenty of willing market participants. Put out the credible threat and figure it out for yourselves. And that's what I believe the Treasury Department is up to, is that they are going to put out that credible threat, make it very well clearly communicated that they are going to be there buying back these bonds. And that clear communication should mean that they don't even have to do anything, and that the market themselves will be in there knowing that the Treasury is backstopping it. All right. Many times in the past, a better currency has replaced a worse one. Gold replaced silver, for example. Paths of valor. No, not really. All right. there's very rarely do you find a position in which that a good currency comes in and replaces a bad currency unless the bad currency completely fails. Because what it is, it's Gresham's law, right? And Gresham's law says that bad currency chases out good currency. And you can really just think about it for yourself, right? Think about it in this fashion. If you had cash in one hand and a gold coin in the other, and I'm a merchant and I'm going to sell you something. I got this here apple I'm going to sell you, right? And I'll accept cash or gold for currency. And now you're looking at your cash and you're looking at the gold and you're thinking, okay, which one do I want to give this guy, right? And I'm sitting there looking at either one of them saying, I'll take it, either one, I don't care, right? Are you really going to be like, here's your gold coin, man, here, I'm going to keep my cash, the fiat currency, and I'm going to hand over the gold? I mean, does that seem reasonable that would take place? Of course not. Nobody's going to do that. I mean, there might be some people out there who do that, who don't understand the value of gold, but for the most part, people are going to hoard the gold coin and hand over the cash. And this is the same answer that I have gotten from pretty much everybody I know who has even a little bit of understanding of the value of gold. So this is going to be the same case no matter who you are, no matter where you live, right? And that good currency, the gold, will not be replacing a bad currency so long as the bad currency is being accepted, right? So if people are like, no, I'll take it, right? Then the gold currency will end up being hoarded away before the bad currency, is completely collapsed. Once it does collapse, then the gold can come in, then the good currency can come in, but that's Thayer's law, right? That's the complementary to Gresham's law, right? It's the exact reverse of it, that once the current currency has completely collapsed and is no longer being accepted, then the good currency can come in and replace it. But it has to happen in that fashion, or else people will just simply hoard on to the good stuff. And it was noticed with coin clipping. Like, this is how long ago Thomas Gresham was, like, from back in the 1500s or something. And that's what he had noticed, is that clipped coins were in circulation where unclipped coins would get hoarded, right? Because the clipped coins had a little less metal content to them. So, like, people would literally clip the edge of the coin off, keep some of the metal for themselves, and then spend that coin at face value. Well, all the clipped coins would be in circulation and all the unclipped coins would be hoarded away. And this is what Gresham had noticed. All right, what time is it? I gotta go, guys. It was really fun hanging out with you, but I'm already late getting back to work. Uneducated Economist, you let me know.